which is managing risk.
Yeah. We got producer tomorrow on the ones and twos today, people. Let's give her a little round of applause if you can. We'll hear it somehow.
Absolutely. John who? There used to be a guy I just don't. We love
easy
John.
on my man John. Now he's a Badger. We're Badgers. You got to be easy.
We love John. So, but we're going to talk about managing risk in a market crash. How do you define a market crash?
I mean, I like the headline that our redhead friend has put together here, but I mean, I honestly would say crash is like 5%. Because I remember sitting through the 1 day flash crash in May of May 6th. That was crazy. That was absolutely nuts. I mean, you just didn't know what to do. This move comes close. But that was literally happening in the middle of the day. That type of thing is not supposed to happen in the middle of the trading day.
Right.
And it was scary. You didn't know what was going on. Even if you were positioned the right way, in positions that you had, you're like, okay, is this a good place to buy stock? Is this a good place to get long? I don't know, And then boom, another move down happens. And so I think this is a good headline, though, because it does get your attention. And there was a mini crash in oil the other day, big move. So that's how I would define 5% or more, maybe. How about you?
And I agree with you. And I think you pointed out something that was interesting, too, is that it happened during the day on the equity side, but it felt abnormal. The 5% is 5%. It's a big move. But in that particular flash crash, the whole mechanism of liquidity kind of got out of line. So markets the liquidity wasn't trading like you would have expected. It just, that felt very crashes because not only was the movement severe, just we've seen 5% down moves that are big moves, but it's orderly. Well, what I mean by that is, yes, the market eats through the bids very quickly. It moves very quickly, but there's a normalcy to it. That flash crash felt very abnormal. And the more abnormal it felt, the more guys stepped back and the more abnormal it became. So that was interesting.
There were no bids for a little bit. And I should really define what I mean by 5%. I meant 5% like in an index, et cetera. Right. I would say something that's a little more volatile, like oil, like gold, probably 10 to 12%, honestly.
Yeah, I would agree. So tomorrow, let's jump one ahead. So, and this is exactly it. Markets do crash. But they bounce back often. So, I think the thought here is probabilities here and looking at, how often. And I think, and it's interesting, you referenced flash crash. They stick in our minds longer. But if we go back, I don't know, in my mind, I think there were more of them than there actually were, just because they were different events. But I think Frank is spot on here when he talks about this idea of we have these falls, but the amount of following days we trade higher is our edge right there. That's an important stat.
Yeah, it is. And this chart is really great because it does speak to that ability of the idea. I mean, there's many different sayings, right? You want to look to buy when other people are scared. And of course, with that, you have to be careful. You have to, pay attention to your risk levels and what you can do. It doesn't mean you go, both hands go buying. I mean, in these situations, you got to be smart. And I feel like a lot of times when we have these type of moves, they are opportunities, right? I mean, they create opportunities that you otherwise just might not get. Because, you just don't know when you're going to have such a strong opportunity to sort of, scoop something on a low. And so we've seen that. But, again, with the idea that we get the bounce back at some point, whether it's, relatively fast or over, a course of a couple of days, that creates the opportunity that we're looking for.
Right. And so, this is, in my mind, this is the first half of the story. So how do we move the 50-50 ball? We always talk about that directional trading, that static delta futures trade is the 50-50 bet, the coin toss. You and I have no idea if the next tick is going to be up or down, or the next close is going to be up or down. But statistically, this is a relevant number, 64%. The trade-off is the second slide, if we jump to the next one tomorrow, where, So we know 64% of the time following a pullback, we get this bounce. But bounce after what? And how do we manage that? And how distasteful does it become to try to pick that bounce depending on the break? And, it's interesting. And I mean, you're a very experienced trader. And I think that while we look at that stat, and that's an interesting directional scalping stat, part of me looks at the more damage done in the short term, the more damage can be done the following day. So your thoughts, I'm just curious, because you've lived through these events and traded both sides of them. And we actually have seen these tremendous bounces, but we've also seen, I mean, 08, 09 with different animal, lots of down days in a row. So, is there, and I guess it's hard to say in terms of percentages, but if we were to look at this and say, $5 is roughly 5% on this small 75 right now. And I know it's a little bit more. $10 is 10% or 12%. Do you look at that down move? And I agree with you that 5% numbers are good numbers. So does your behavior change between 5 and 10 in terms of thinking about your next step in terms of a correction?
Yeah, man, you said so many good things there. I do want to harp on that point, which you made as far as like when you have a big move down, it can affect, like the psyche of traders, and you could see another, move. Maybe you might see the dead cat bounce the next day, but you could see a move down the day after, or things, something along those lines, which gets to the whole point of why we have to be, small and going back in and,
Right.
and getting that type of trade on. But it's I think it really depends on, to your question, I think it really depends on how you feel initially. So if it goes down that 5%, and if you don't get in, you're like, I'm waiting for 7 or 8, and you actually do get that move, and then you get in, then maybe you start, if you get in too early on the 5, depending on what type of, you really have to think about the type of opportunity that it is, and currently whatever, thing that you're trading. Like right now, let's just stick with the small stocks. Right now, the small stocks are definitely being moved by rates, and,
Right.
and that's there's no doubt about that. And so I think, we've seen this move down. I mean, look, we got on the chart right here, right
Yep.
under the R on after. I mean, we just saw another, big move more recently, and now we're seeing another move to the down. And, who knows where rates are going right now? I don't really know. It's an interesting market. We got all this talk about inflation. I do believe it's kind of transitory, but I mean, what is transitory? Is that going to be 6 months? Is that a year? Right. So I don't know. They're just so good with these words, man. God. So
They'll leave them out. Right.
I mean, that's a great one. Transitory, it really is a tricky word. So, I tend to view it, we're traders, right? And so I tend to view it like, hey, if we got a nice 5% move, that's pretty abnormal. I'm fine nibbling here, right? Because the idea is overall what we're talking about is catching a falling knife. And I've never tried to do it. I mean, like physically, I don't know, have you? Yeah. I was thinking about the other day, like somebody dropping a knife from another store. You try to, how do you catch? Do you catch it like this? Do you try to go like that? That's what we're talking about here, right?
Absolutely.
And so the first time you try, you might try like this. You might try to catch that knife, like Mr. Miyagi style or something. And then if he goes down another 5%, then you might try again like this, right? So it's really what we're doing here. It's a dance, and right. It's all about your comfortability level. I think you just have to be small, whatever small may be to you. You have to be small when you go in, because you have to approach it like this could go down further, because like you said, Pete, that is a thing that I have seen before many times, where you have a big down day in whatever we're talking about, whether it's gold or small stocks or, anything. Right. And then you have another down day after that. You see the futures up, whatever, a little bit the next day, and next morning, you're like, oh, we're going to go up. And then, we don't reach a certain level, and then it's down again. So I think that's why you got to be small.
You hit on it perfectly. And tomorrow, if we can bounce ahead one more, that 5%, I think just as a ballpark, you and I both agree, I'm interested there. But I have no idea if it's going to be a 10% or a 12% down day. So the only way that I can really, in the long run, take advantage of where we started, which was 63% was an interesting number to us, is to put a limit around 5% is an extreme. I'm going to, as you said, dip your toe into the 5%, but I'm not sitting with them when they're at 10%. I may have been in at 5, out at 6. I may have been back in long again at 7.5 down and out at 8. And maybe I'm long again at 10, but I'm not sitting at where I start to think it crashes, at least on my side. And I'm dying to hear your thoughts. The fact that I love them at 5 doesn't mean I'm still holding them at 10 or adding more at 10. I think this is where we go a long way talking about this efficient, fair market. Statistics is a tool for us. So it's one tool, but that 63% number, tells us those are, I like that from 50-50, but it also tells me 37% of the time, this isn't going to work. So how do I deal with the 37% of the time? I use some sort of management around my idea and then look to re-engage at another level. Given the expanded range, given the expanded volatility, how do you start to construct? I mean, do you look to basically, is it one and done? And what I mean by that is you'll take a swipe at it, and if it doesn't work, you'll really wait to see if there's a further shakeout, or will you take a couple nibbles on the way down?
It probably depends on the product and what supposed familiarity I feel like I may have with it. Like to give a point example, like right now, the trading these 10-year yields, right? Trading S10Y, and right now I'm sitting on a loss from 1.35, and so I'm trying to, I don't know where the next move is, right? Like we've kind of danced around a little bit, and so I'm in the process of thinking all this out right now, as you can tell. Like I'm fumbling over the words, but it is something that I'm aware of. I'm aware that I am going to have to at least give this some attention at some point, because I don't know what the next move is going to be. I don't know when it occurs. Does it occur overnight? Does something happen? I mean, I'm not sure. And so that one is probably one I have a little tighter range on versus, maybe some type of equity, name, or currently like, I still have this Crocs position on this earnings position. I actually sold a put spread and then actually got long couple calls too. And that one worked out. I should have sold the calls out this morning. I was tied up doing something else, which is, classic for earnings, but terrible. But I'm still having
multiple jobs. I know, right? I'm with you, man.
I'm still sitting on a win, and I actually plotted the intraday chart along with IWM, and it's clearly moving along with that today.
Interesting.
So that being the case, I'm going to wait it out till tomorrow. I'm actually in August, so that's another reason I'm fine with it. And we'll see tomorrow. Again, I actually got in I collected $1 to get in, so that's that's also kind of helping me out. The anchor, I guess, of my position really is that short put spread. While I'm long those calls, I got them, I got a free look at them basically. So for this one, I'll wait it out a little longer. So, I guess that's kind of it. That's my thought process around it. Depending on how familiar I am, depending on what the position is. If we're just talking about what we just had up in SM75, and that what I would probably have some tighter, limits on, because again, right now we see this move with rates and with small stocks. And so, I would keep a closer eye on it.
Yeah, I couldn't agree with you more. There is, by nature, we can't be equally familiar with everything. I mean, none of us are there. I mean, you've got your Tom Sazov savants who can trade 100 different things at once. But I think a little bit of that changes that ability to modify a little bit and be more engaged with a little bit of experience and product. I agree with you. So I think it's an interesting exercise. I think again, it's interesting how you've built yourself, by selling the puts, you've built yourself this opportunity to give yourself time, which is, as traders, that's what we want, is time, and time for our ideas to work. So,
and I got to say, that really, that's not a trade that I would have done a year ago. I think, the tasty ways really helped me in that regard. I mean, as simple as it may seem, I'm a long-term trader. I should have, why wouldn't I think to sort of take a credit in to get long something? It's not something I really just did. It was just kind of like, I'm going to buy these calls. I think they're kind of cheap and, whatever. So, kudos to our crew and everybody, I'm picking
Absolutely.
up things, I mean, we're always still evolving. We're still learning.
Yeah, that's one of the great things. Traders are like sharks. If you're not moving forward, you're dying. So,
yeah. Do you think by this point that Frank has gotten shaving cream on his face during this bachelor party thing? I'm wondering. I hope so. Somebody has shaving cream.
I just hope they don't have him strapped to a pole somewhere. So that's the only thing I'm concerned about. Then it becomes a safety issue because if the pole's high, there's a slip and fall issue. So
I'm a little nervous for him, man. I mean, he said, they're not in NYC. They're in like upstate New York in the woods somewhere in some cabin. It doesn't sound good, Pete.
See, he's such a South Side guy. He thinks like anything outside of, between 130th and 80th Street is like Deliverance, like Ned Beatty. He's Ned Beatty in the Deliverance. It's unbelievable. He's such a civic kid. Unbelievable. No, but you know what? I'd say the odds are good. We're going to have him back with us. So
he comes back in one piece.
Yeah, right. Emotionally scarred. Good chance.
Oh, yes.
But he'll come back in one piece. All right, guys. Well, this is going to wrap up this segment of The Leap. Jermal and I will be back with you next Tuesday. So have a great day and stay tuned for Splash in the Futures.